Joining us now to talk interest rates and the business confidence index for the third quarter of the year is Etienne le Roux, chief economist at RMB. But first of all, Etienne, it's your day of results.
Yes,
RMB
indeed.
being part of First Round. What happens within an organization when you get numbers like you came out with today, which really are just giving the rest of the market a hiding?
Absolutely. I think there's a sincere sense of pride. I mean, it's fantastic to work for an organization of that caliber, and it shows in the results, Alex. So may it long last.
And that story that Patrice suggested, that West Bank could one day be a separate entity, is that consistent with the way you guys operate?
Yeah, I wouldn't know. I mean, the higher powers obviously decide about these things.
But
what is
philosophically
interesting,
though,
yeah, once again, I don't think I can comment on that. But I think one aspect that Patrice highlighted is the cross-competition, if you wish, between West Bank and between FNB and between FNB private clients and RMB private clients, or private bank for that matter. And that's always been a trade of the group, and I guess one of the reasons why we're so successful.
Well, hopefully the business confidence index is going to start getting equally successful.
Well, let's hope so.
Picking up in the third quarter.
It is.
Some good news for a change.
It is, absolutely. I mean, the index has been at around 40 for almost a year now. So to go up 5 points is noticeable. Sadly, it's not yet in that net positive territory. So we're not yet above 50 at 46, but we're moving in the right direction.
But isn't that just a rebound from the really dark days we've had in the first half of the year?
Not necessarily, Alec. I mean, if you look at it, the improvement in confidence was quite broad-based. It was 4 out of the 5 sectors that we covered that actually showed an improvement in sentiment. And that's pleasing. I mean, that in itself, I think, is a good story. But once again, we shouldn't go overboard here. It's still tough. Economic conditions are very challenging. And as I suggested, there's still a small majority of our respondents that are still pessimistic. In other words, 46, the index is still below 50.
So 54 negative, 46 positive. We're moving in the right direction.
We're moving in the right direction.
Coming from 40. But
exactly.
What was interesting was building and contractors. Building contractors, rather, that subsector. Yeah. All of a sudden they got a smile on their face again.
Yes, more so building contractors doing business in the residential market, not so much on the non-residential side. Which
so that's
is odd.
home builders, is it?
Yes, yeah, so property, real estate and building houses and so forth. Which is quite odd, actually, if you think about it. The economy is growing at 1%. And yet here we have building contractors in the property market feeling pretty upbeat.
Is it because the banks are giving a little bit more?
I think you're spot on, Alec. I think that's part of the reason. There's no doubt that banks have become a little bit more lenient in handing out or giving mortgage loans. But I also think it is a function of supply or the lack thereof. Private sector investment in the property market, thinking about developers, for example, has been very, very low over the last 4 or 5 years. So I think there's a shortage of stock. Our sister company FNB in their real estate survey suggests that more and more estate agents are complaining when it comes to a lack of stock or quality stock, which is inhibiting activity in their market. So I think it is a little bit of improvement in demand on account of what banks are doing, but shortage of good stock.
Is it being reflected in house prices yet?
Yes, indeed. Once again, if I can fall back on FNB, house price inflation for the last 2 years have been steadily grinding higher. So year-on-year price inflation certainly on the up.
Well, that's some good news for South African consumers.
So look, I mean, talking about consumers, once again, I think we have to differentiate. Retailers selling to high-income consumers are arguably better placed than retailers selling to low-income consumers. So that differentiation, I think, is quite important. And
I guess you've got Woolies versus ShopRite. All you have to do is look at the performance of the share prices.
Very good example. And then there are also pockets that are not doing too badly. I mean, the third quarter, for example, we saw sales of clothing, footwear, DIY and hardware not doing too badly. So that part, hardware, perhaps to some extent talk to the residential property market. If you particularly go into wholesalers of non-consumer goods, building material particularly have picked up quite nicely in the third quarter. So once again, talks to the residential property market showing a bit of life.
Pull them all together, but when you have a look at the new car sector, And we saw that in Westbank's
Yes,
results being a little
yes.
muted compared with the rest of First Rand.
Absolutely.
Your
There's pressure there.
indices are really awful
No,
for that sector
particularly
of
in the
market.
third quarter, I mean, the index came down 15 points. So
How was that possible?
the level is quite low. It's 28. I think we had at the time in the second quarter, it was very difficult to explain why the index went up as much as it did. It went to 43, and now suddenly it came back. So maybe that's part of the answer. But generally speaking, if you look at NAMSA data, new passenger vehicle sales year on year has been contracting. That's certainly a discretionary item. It's a big ticket item. People can delay the purchase if they want. Interest rates are going up. Most of that is being done on credit. So it is understandable that that part of the industry is taking pressure. What is interesting, Alec, is that while confidence of new vehicle dealers have come down quite sharply, confidence levels among dealers selling second-hand cars are going the opposite direction.
Okay.
So interesting.
Keep your house, go and buy yourself a second-hand car, and you should be a happier person. Thanks, Etienne le Roux, who's a very happy person. He's the chief economist at RMB.